Hong Kong is waking up to some tragic news this morning. Live look at the Hong Kong apartment complex destroyed in one of the deadliest fires in the city's history. Emergency crews are still working to put the last of the flames out after the fire broke out Wednesday afternoon. The latest tally, 44 people have been killed, with many more still listed as missing.
Yeah, that's right. It's certainly an issue where authorities are trying to get to the bottom of exactly what sparked this blaze. And also, as you said, those arrests have already been made and investigations, criminal investigations, are going to be proceeding. But you are watching the China show this morning. I'm Annabelle Drewlers with David Ingles. And as we said, this is the news of the morning, really. And a complex that was built in the 1980s. It has about 2,000 different flats as well. It had been undergoing a very lengthy renovation. So it's a huge loss of life, essentially, and hundreds of people still unaccounted for. Yeah, the latest toll coming through, 250 plus. I think that's going to go up as well, given the latest numbers that have come through since we woke up this morning. It's worth keeping in mind, of course, the extent to which the fire has already lasted. And as we were just pointing out, firefighters are still trying to put out the last of the flames. First reports around mid-afternoon yesterday. Here we are talking about it. Min Lo, our China correspondent, is at the scene and just right now with the latest. Min, what can you tell us?
Yeah, I mean, it's really a devastating night. This fire has been raging on for over 17 hours now. And if you look behind me, we can see through some of the apartments, they are still blazing with fire. And there are powerful water jets that are still being deployed. It's really a horrifying night for many of the residents that are just so anguished by this and just figuring out where they're going to stay next. You know, some of them are saying that they don't have insurance for their homes, and they were just shocked at how fast and how quickly the fire spread. And this was a point of contention because the authorities did acknowledge that the fire spread, the speed of that spread was very unusual. The scaffolding had caught fire. This entire housing compound is over 40 years old. They are all subsidized housing units, and it was undergoing heavy renovation. So there were all these bamboo scaffoldings that were surrounding them, very characteristic of Hong Kong. You add to that, again, very typical of Hong Kong, these units are very, very close together, very densely packed. So the fire was spreading quickly. And the government is now handling a criminal investigation because they suspect they have already found substandard building materials used. They found polystyrene materials covering the windows, and they said that the green netting, the plastic sheetings, if they meet compliance standards, they're supposed to be fire resistant. And they suspect that the wrong materials that did not meet requirements were used. So they've arrested 3 people, and that investigation is ongoing. And residents are certainly going to be demanding answers about why those substandard materials were being used here.
Yeah, exactly. I think the Secretary for Security, Chris Tang, has spoken about these materials in question and already said that the situation is unusual in terms of just the intensity of the fire and how fast it spread as well. But just give us a sense of what's happening on the ground today and what sort of actions are expected to take place, given that there are just so many people that are still unaccounted for.
Yeah, I mean, right now, this road, the entire area, all the roads coming in are blocked, and the entire road is now filled with fire trucks, police trucks. It's very busy at the moment. The firefighting is ongoing. There are hundreds of people still unaccounted for. But really, if you look behind me, the buildings are completely black. They look burnt out. It looks like the shell of the buildings left. And of course, the authorities are also focusing very much on what to do for the residents that are displaced, right? So they have opened up community centers nearby. They're going to keep them open overnight so people could stay over as well. They have identified about 1,400 empty apartment units across the city that people could stay in temporarily. And President Xi Jinping has also called for an all-out rescue effort. We heard from Hong Kong Chief Executive John Lee. He also paid tribute, especially to that firefighter, just 37 years old, I believe, and he's been working as a firefighter for 9 years, and he perished during part of the rescue efforts as well.
Yeah, so just so our viewers are just up to breast on the latest numbers that we understand on the missing. An earlier estimate put that at 279. A few hours back, officials said an additional 72 people are reported missing. Min Min, on that note, and I'm wondering if there's anything you can glean from where you are in terms of the latest and where we go from here as far as the rescue efforts, to your point, are concerned at this point.
Yeah, the police, I mean, we see them here. We were trying to speak to them, but they said they have no information to offer. I was just asking if they know if there are still people trapped inside, but they didn't have any information. But from the official press briefing, we knew the latest death toll is 44. Earlier on, they said there were about 270 over people that were unaccounted for. Later on, they said there were additional 72 or so people. So it seems like it's in the hundreds, the number of people that are unaccounted for. And we know the rescue efforts are still ongoing. One of the things that has been also an issue is that some of the residents are saying they feel let down by the authorities and by the fire department. Why did it take so many hours to put out the fire? That's one of the things that they mentioned. And the fire department did say that among the challenges was because of all the scaffoldings, there were all these debris that were falling down in front of the buildings, making it very dangerous for the frontline firefighters. And also the temperature was so hot, it made it very challenging for them to enter the building. And even now we can see when the water jets are being deployed, it doesn't seem to be reaching the very tops of the buildings. And that is where you're seeing the building being the most blackened. So it seems like there are some constraints as to what the firefighters can do, and authorities say they might have to take until the end of the day to fully put out the fire.
Yeah, and to note as well, Min Min, on that point around just the building materials, aside from what was supposed to be some fire retardant cloth and plastic sheeting, I mean, there was a lot of bamboo scaffolding, and Hong Kong is really one of the few places where bamboo is still widely used in construction. But that was our China correspondent Min Min Lo there on the ground for us in Hong Kong as we continue to bring you live updates from one of the biggest fire tragedies that we've seen in the city in decades. But to some other news now, because we are also monitoring the Pentagon this morning. It's accusing major Chinese tech companies of aiding the country's military. They're recommending that Alibaba, Baidu and BYD, plus others, should be added to an official list. Let's bring in now our tech reporter Luz Ding, who's with us this morning. So just to give us a sense of the timing of this, and of course it's a list or a letter that was sent just weeks ahead of Presidents Trump and Xi meeting on the sidelines of APEC. Why are we getting this sort of reporting now, and then why these specific companies, do you think?
Yeah, so our colleagues have learned that these companies are recommended to be on the list. And then there are still a lot of procedures to go. As you mentioned, it's before the meeting between President Trump and Xi, so the momentum may have changed, and then it's unclear how long time it will be needed to reach a conclusion, because it reached the committee on the Congress and Senate, and there's still a lot of process to go through. How
does being closer on the watch list or the actual list change the way these companies operate? What's the impact going to be on these companies effectively?
Yeah, so there's no legal repercussions of being on the list, but it serves as a warning to companies, especially in the U.S. It's sort of more like a shaming list rather than what is more important is going to be on the Commerce Department's entity list, which carries to real impact on export controls and all that.
What's been the response from companies to this? So it's obviously not a list that Chinese companies want to be even possibly finding themselves on.
Yeah, so this morning we actually received a response from Alibaba, one of the biggest companies that are mentioned. They, as they said before, repeatedly denying that they have association with the Chinese military, or they are not. They're also not as part of the military-civil strategy of the Chinese government. And then they also noted that they currently do not have any contract or any is not in the U.S. military procurement plan. So even if they're on the list, it will not impact their business in the U.S. or anywhere else.
Luz Ding with the latest there, our tech reporter. A very quick glance at where we are market-wise here. So we're looking at the Asia benchmark, the Kospi index, where we did just have, of course, that rate decision coming through out of the Bank of Korea. We'll get more details from the actual statement in a couple of minutes, and around this time in the next hour, we will bring you, of course, the briefing coming through out of the Bank of Korea. Suffice to say, when you look at markets, we're up for a fourth day across equity markets. Flip the page, please. Have a look at the yuan. Sterling, of course, on the back of the massive headlines coming through there. At 132.53, we should be highest on cable in about, I'd say, about a month or so. Bitcoin, other thing we're tracking, back above 90,000. And, of course, we'll talk more about the stimulus effect in Japan coming through with a 70+ billion US dollar number as far as new financing and new JGB supply is concerned. That's the plan, at least. A50 futures going into the open today. Big move up in oil prices. Shanghai crude is also coming up. And as far as dollar China goes, at 706, yes, strongest level in some time. Technicals, this one looks oversold to the downside. More on this, of course, later on. But yeah, let's get back to the top story here, too, Bill.
Yeah, we'll just leave you with a live shot here and going back to these pictures that we have this morning in the city of Hong Kong, because this has been one of the deadliest fires we've seen in the city in decades. 44 dead. There are hundreds still unaccounted for. A housing estate in the northern part of the city that's in the Tai Po district was engulfed in flames overnight. It's taking firefighters hours to put them out. You can still see at the top of the building there that they are ongoing, and our China correspondent in Min Lo was just making the point that even the water at this point is struggling to reach the topper levels of these complexes. But we'll bring you updates as we get them this morning. More ahead. This is Bloomberg. You're watching the China Show this morning, and we are giving you an update really on the expectations we have going into the cash trading session this morning. There's a couple of different things we're going to be watching. I think firstly, you've got those companies that have been, well, this agitation really to add them to a list in the US, a Pentagon list that outlines Chinese companies that have military links. So those overnight, there's been reporting that there was a letter sent, but Alibaba, Baidu, BYD named in that. On the eco front as well, you've got those October industrial profits to watch. Yeah, at about the open coming out today. And speaking of the open, well, before I get to the open, later in the afternoon, there's a briefing out of the NDRC. Just keep an eye on that. Obviously, going into today, it's going to be all things property. So obviously, one company has been focused, Vanke. Following just the recent slide as well in many of the bonds going into this morning. And then, of course, we'll talk more about this specific bond, which has yet to obviously show declines. This is the one in question today. We'll get you more details. And this probably won't look the same graph if and when things get started. It's worth pointing out as well, in the offshore space, so not the yuan, but the dollar bonds, we are also largely expecting to see this permeate into this. This is our high-yield bond index. We're up 11 straight months going into this month. We've seen a decline of about 1.3%. I think about 90 of the 100 bonds in the benchmark are trading above 90 cents, which goes to show that might actually change going into the news flow today. All that is to say, let's bring in our team to talk us through the latest here. Trista Shinilo out of Bloomberg News, and of course out of Bloomberg Intelligence, our China real estate analyst, Christy Hong, is also here with some analysis. Trista, let me start with you. This bond that is coming due in about two weeks, what do we know about what's going on there?
So late last night, the company sent a filing on mainland saying that they're seeking an extension to repay this bond. So it actually shocked the market. A lot of investors turned very surprised on this because Vanke has been long time seeing a very, one of the strongest developer in mainland who has not been defaulted yet. Earlier in the property crisis, we see Evergrande defaulted and Country Garden. But Vanke, I think investors for some period of time, they've been comfortable on this name. So we have seen there's bond price have been stable. But for this, filing came late last night, it's actually shocked the market and, raised some concern from the investor about how, whether the support from government will still be there or whether at the end of the day, Vanke will still be defaulted.
So what are the next things to watch then? What are the sorts of deadlines or timelines that you have in mind?
So Vanke will organize a range of meeting with investors on December 10 to discuss, to try to gain their support about the bond extension. So if they cannot get the support, which I personally think may be a bit unlikely, but it will be a default. So, and then also by the end of, next June, there will be over, 30 billion yuan notes come into mature. So that's a big number we need to pay close attention to.
Christy, we've seen this before, not with Vanke, obviously, but in what tends to happen when we get sort of debt events like this, as far as the underlying business, the property business is concerned? How does that inform you about what happens next with the company?
Yes, so if history is a guide, with all other developers we have seen, things tend to go downhill from here. Because of weakening buyer confidence, people tend to stay away from the projects, and contractor sales would face a steeper decline, and lenders would have a tendency to make it harder to refinance loans. And asset sales would be also harder because buyers would then be seeking a fire sale price. Then all these come together, it would mean that Vanke could face escalating liquidity crunch. And yeah, I think from our experience, things might not look good from here from a liquidity point of view.
Yeah, so if there's an absence of state backing, then it sort of tells you that they're treating Vanke in the same way that they're treating other developers as well. What does that mean for the liquidity situation for the company?
Yeah, I think from a policy standpoint, it really tells us that, it raises the question of the commitment of the government, whether it's determined to end the housing slump. I think it would weaken broader homebuyer confidence for the broader market, and I think it's going to weaken 2026 home sales outlook from here. And I think from a liquidity standpoint, it brings a lot of question on, whether it would be sustainable. And I think from what we have seen for other developers, turnaround from this point, in a liquidity point of view, is very, very hard to achieve.
Yeah, it's almost like an event horizon. Once you cross it, it's very difficult to pull back. So Trista, what does this mean for the broader industry? Is this, well, suffice to say, it's not just a story of the company, but does this have broader ramifications across the sector?
Yeah, of course, it will definitely, hurt the overall confidence, especially from the consumer side, right? And when they see such a big name like Vanke, if they're going to go to default, it will definitely be bad news. And as Christy mentioned earlier, the sales number is not good. So it's really hard for people to right now to see a hope about when is the end of the property crisis.
What's your reaction then in terms of where we go from here?
Right. I think from a policy standpoint, there's very little the government can do to stimulate the housing market. Down payment ratios and also mortgage rates are near record low. And I think from here, what we're facing for the housing market is acute oversupply problem. And that's especially for low-tier cities. We're talking about new home supplies around 80 months of sales, and it's going to take a long time to digest. And that, with the oversupply, this is going to exert a lot of pressure on home prices. And I think for the Chinese public, the biggest hurdle is confidence. People are not confident enough to buy a home. They're not optimistic about the outlook for home prices, and they're not confident about the job security and outlook of the economy. And that's why we continue to foresee a persistent decline in home sales for China, and that's why for developers it's going to be very hard to sustain the sales and liquidity.
All right, in the pre-market on your screens, 5.5% on Vanke. So far, not all, but you do have a few also falling. Sunac, China is also down in your pre-markets. We're down about 5.5%, as you were pointing out, on the equity, on the 8 shares to be more specific on that. Christy, final question for you. Can the government afford not to bail out and intervene? I mean, is this going to be, in perhaps a different form, another Evergrande story that will, have a longer lasting effect, to your point, on buyer confidence?
Right. We think that the government would continue its playbook of aiding projects, not developers. It hasn't saved a single developer before, and Vanke might not be an exception. And I think from an incremental damage point of view, I think we are 4.5 years into a property crisis in China. I think when Evergrande or Country Gardens non-payment hit, it was a bigger shock to the market. But now I think a lot of damage is already done. So I think incrementally speaking, it's not as shocking as what we had in the past years.
Team, thank you so much. That was Christy Hung, and here with us as well is Trista Shinyi Luo, just taking us through the latest. It's a story we'll be tracking going into the open and throughout the open here today. Also, other things on your screens, some of the big tech plays. We talked about the Pentagon and that list. Wuxi App Tech, RoboSense Tech, also coming up also very shortly on your screens. In about 7 minutes, and by the time I get to it and you see it, 30 seconds away, Hang Seng Index, A50 futures, dollar China, we had a fix coming out of the day, and yeah, there we go, weaker than estimates. It is still the strongest renminbi against the dollar in about, let's call it 12, 13 months or so. Oversold to the downside on dollar China. Plenty more ahead. This is the China Show. Right, a glance at futures right now. So equity markets are up for a fourth day. U.S. futures are, I was going to say continue to give some upside, a little bit of that as well. We have seen some momentum really come back across risk assets this week. Case in point is, you have Bitcoin back above 90,000. More on that in a moment. Separately, we'll get to this later on as well, and we talked about it already. The property story, the high yield space, whether that's onshore in renminbi or offshore in dollar bonds, very much in focus today following the disclosure from Vanke overnight over that upcoming bond.
Yeah, that's right. Looking essentially to push back the timeline, or this seeking the first yuan extension ever for that company.
Wow.
So what does that really tell you about the state of China's property market and the willingness as well of Beijing to aid its developers? Because Vanke was once seen as a relatively stable bet, but as we were just speaking with Bloomberg Intelligence, they're saying that they're unlikely to come to the assistance of the company. They're more focused on projects rather than the firms themselves. But you are already seeing a read-across reaction to others in the property space this morning. But let's shift on and take a look at some of those tech stocks as well, because we've just had a Pentagon report, or reporting on the Pentagon essentially concluding that a range of different Chinese companies should be added to a list that aid the Chinese military. This is the so-called 1260H list that's published once a year. And again, it just outlines companies that the US says have ties to the Chinese military and that operate or have operations in the US market as well. So these are some of the names in focus. You can see others, Wuxi App Tech, RoboSense as well. RoboSense, also a partner of NVIDIA in its autonomous driving project. Also still on the earnings front, because we had Alibaba Health figures coming out, their first half revenue beating estimates, and Li Auto fourth quarter revenue missing, the forecast rather, missing estimates. So that stock likely to see some pressure in the session.
You're watching The China Show. We're waking up, of course, to the tragedy and the ongoing efforts to put out the remaining of the flames. And based on the commentary, in case you missed it, of course, that massive fire, biggest in decades, 40 plus dead, based on the current numbers, 250 plus, 270 plus missing. And the commentary that's come through so far is that what started mid-afternoon yesterday, initial reports at least of the fire itself and the efforts to put the remaining of the flames to bed will likely extend beyond the 24-hour window well into the evening, not to even get into and not to even mention the rescue efforts there. We'll get you the latest on the ground. Our correspondent Min Min Lo is there for us, of course, here in Hong Kong this morning. Just going into just to pivot here and have a look at other things we are also tracking today as it pertains to other things. He had a couple of things to mention too. We do have this breaking news line that has come through right now. Two things. One is an industrial profits. That's not very important today. We'll set that aside. Let's make that call. Vanke, dollar notes sliding, record lows. That's now crossing the Bloomberg terminal. on the back of that disclosure overnight of that bond extension, which was a bond that was coming due, I believe, in about 2 weeks or so, has now been pushed back, according to the company, and I would imagine that's causing ripple effects across equities, fixed income, whether that's onshore and offshore, but the bonds in question are, of course, in the onshore space.
Yeah, lots of questions around the effectiveness of government rescue policies, and we have seen multiple different city governments trying to take steps to revive the property market. But if anything like this, Vanke really sends a chill across really the appetite of people to go out and purchase properties as well. So certainly is going to be having broader ramifications. But you do just see here, stocks are fairly flat, really, as we come online. This is mainland, of course, for the session today. But let's also take a look at what's happening in Hong Kong today, because there are a couple of different movers that we're watching in particular. Alibaba, you're seeing a bit under pressure. Baidu, both of these companies have just been named on a Pentagon letter, essentially, to lawmakers, but stating that these companies have ties to the Chinese military. So we have got a range of companies. There's 8 in total across mostly the tech industry, but certainly there's calls to be added to this special 1260H list that, again, states companies that the US government says have ties to China's military. But anyway, we'll leave that there. And as we said, that big focus is coming back to Vanke this morning, because we have seen dollar notes falling to the record low on that bond extension proposal. But you're also seeing that stock slide this morning.
We were down. OK, there we go now. It's down 8%. These are the 8 shares we're looking at. Can we get the A shares as well, guys, if we can show that too on the company shares? It's not just that. We talked about the dollar bond story. The bond specific one in question, okay, just to lean on the side of specificity here, is the December bond. It's coming up on your screens. It shouldn't show any change. The last trade, we're not sure if it's today, of course. This doesn't trade as liquid as one would expect. That is just to say, this one in question is the one that the builder is proposing to delay the repayment of. And it last traded at 99. I would imagine, given the news flow, that's no longer going to be the case once we do get, of course, a trade on this specific issue out of the company there.
Yeah, it's a 2 billion yuan note that's due December 15. And what we've also heard is that they're looking to arrange a meeting with bondholders on December 10 to discuss their proposal. But still in the policy space as well, because this is going to be something that we're going to be watching coming into December, is the upcoming Central Economic Work Conference. It's shaping up really as a potential catalyst for the stock market, because after a sell-off that echoes the sharp tariff-driven retreat in April, we're going to be watching, is there going to be consolidation or a breakout from here? So let's get more of that. Asia equities reporter Charlotte Yang joining us. So I mean, I think I've sort of answered the first part of this question, but just outline the significance of the CECW.
Yeah, so the conference is a big thing to watch for the China equity traders, given this is the only, policy window they have before the 2 sessions next year, which is the top legislative meeting. So on the Central Economic Work Conference, which is held every year in the final weeks, they will bring state and owned enterprises, state institutions, and provincial leaders. Basically, they will lay out the key tasks for the nation in the year ahead. And for equity traders, what they say, if the analysts are saying that if we see expansionary policy to support domestic demand, that will be a positive catalyst for the market. And also, right now with Chinese market, we can see that investor positioning are quite defensive. But analysts are expecting that in the coming weeks, we could be seeing more positioning around, the tech sector, some of the consumption sector, walking into the event. But with that said, I think one thing to be mindful is that there's no magic just with this policy window, given that, for the past 2 years, actually market fell after the meeting because there wasn't simply that much excitement for traders. But during the COVID years, it was a positive thing. So that's definitely one thing to watch.
Okay. Charlotte, thank you so much. Charlotte Yang there out of our equities team here. Just to also note, just 2 things, right? Industrial profit just came out, and also the Bank of Korea, which held interest rates. We're getting details of the statement now, just coming out as well. And we are looking at them being open to the possibility of a rate cut. It's also very important to highlight that this is a line that they have said that some members have been open to rate cuts over a 3-month window following the meeting, and we have yet to actually see that reduction. I think they've been hold for several months now. I think the last meeting was August, and then the most recent one was, I think, October. And then we have today, and we have 2 more early this year. We'll get more into the story a bit later on. Joining us here to talk about markets, we're almost done with the year. A look ahead to next year. We just talked with Charlotte there about the lack of catalyst in this market. Where are we? A pulse check. Ben Luk is here with us on set. Senior multi-asset strategist at State Street Markets. Ben, very nice to see you, sir.
Always a pleasure for me to come as well.
Been a good year?
Yeah, it's been a great year.
In fact, when you look at the price action recently and people taking profits have been too good.
Yeah.
How are we set up going into at least the final few weeks and going into next year?
Yeah, I think when we look into, first of all, in the equity space, it's been the same momentum trade throughout this year. Everybody has been buying U.S. Predominantly, it's been U.S. tech. When we look into our own positioning data, it is a stretch position that we see in the U.S. That shouldn't be a surprise, and especially in the tech space where concerns over valuation, concerns over positioning, I think those are all valid agreements. But what is important going into next year is whether or not we're going to have this earnings story that's going to be sustainable, especially given when you actually look at some of the exports numbers, some of the chips numbers, they're still very, very well. So I think as we go into next year, the overall earnings story remains to be rather resilient. The question is whether or not we're going to get from more of a tech-led market to more of a broader recovery market, and that's really something we haven't seen. And we still don't believe that's going to be the case going into next year. We actually see that U.S. is still going to be focused on this tech story, the tech trade, whereas we actually see better opportunities outside of the U.S. next year. That is actually an undervalued opportunity, under-owned opportunity. So that's where we actually see more opportunities as opposed to really just focusing on the U.S.
Just on the US, I'd be interested in your views on 2 of the big themes we've seen lately, which is really US companies testing the valuations of other companies. And I'm talking here about this shift to, say, TPUs instead of the NVIDIA GPUs, for instance, or you're seeing the success of Alphabet's Gemini model, and then that also tests SoftBank's investment in OpenAI. Do you see valuations shifting at all, just given that maybe the leaderboards and different company profiles could also change in 2026?
I think so. I think, to your point, I think valuation is, to be honest, it's a very, very rich valuation already across many of these tech-related stocks already. But it's always important to understand that any type of a meltdown in markets is not really just valuation-led. Oftentimes, you have to see a breakdown either from a growth story or basically missteps from the Fed, or basically we have sudden shocks in inflation either triggered by geopolitical tensions or cool-off of domestic markets. And all of that obviously then led to margins getting compressed and then profits obviously collapsing. That's usually how U.S. markets or basically any equity market seems to fail. So for us, it's very much focused on this notion of return on equity still relatively high. And when you actually look at U.S. versus ex-U.S., there aren't that many alternatives out there for investors to still lock in double-digit earnings growth every year and actually still manage to outperform, even if those expectations are still quite high.
Well, okay, so tempt me then with, you mentioned opportunities outside.
Yeah.
Yes, you're not getting double-digit growth, but also outside you're trading at half the valuation.
Correct.
Right, so tempt me with that valuation trap. No, opportunity.
So one opportunity to consider, which to now it seems more like a trap, would be something like Japan. I think Japanese equities has been what we would consider as a market that institutional investors have been really on the sidelines for many, many years already. Although obviously equity market price actions have been quite high, but most of those flows are really driven by domestic investors, whereas foreign investors have been a lot more cautious when it comes to investing in Japan because all they care about in the very near term has always been yen movements. And yen movements, unfortunately, is always going to be triggered by not just BOJ policies, but also obviously how the Fed would move and react to those rate differentials. So I think Japan is a structural story that could actually improve, where we don't really just need to rely on yen weakness stimulus to drive profit margins higher. We're going to see it now already where the fiscal budgets or the fiscal package that was recently released by Prime Minister Takeshi, where you're going to focus on tax cuts, you're going to focus on private investments being the driver. I think a lot of that wouldn't be something that you would see in the next 2-3 months, but it's more of a longer-term multiple re-rating story to your earlier point, where when you compare S&P 500, where PE earnings are like 20, 25 times, whereas if you look at Japan, we're mostly closer towards like 15 times. So there's a lot more room for it to catch up, where investors are still highly on the sideline for now, and investors, when you actually look at the valuation story, it's still quite attractive.
I want to ask you about flows, because as always we have this conversation. You guys have a very unique perspective in terms of the flows, and it's to your point, has it really been that dominant, that the absence of flows? And with this Mizuho transaction, you probably guys have more insight into this. So help us understand the momentum of flows, why you don't think we've seen that, and how do I think about this weak yen, an expensive hedging cost to get into this market?
Yeah, I think when we look into our flows, I think investors basically, for the last couple of years, has been very simple. The strategy that worked was long in U.S. equities. And because it works so well, you're going to stay in that strategy until the strategy fails. And there were blips of it, as you've mentioned, right? We had overvaluations, worry on AI, we had the Liberation Day. But then all of that really lasted for a month or two. And then institutional investors went back into buying the same story. So I think when we look at it from that perspective, it's really because the momentum is really justifiable in a way that the corporate fundamentals remains to be far more resilient in the U.S. relative to the rest of the world. In Japan's case, we're still not there yet in terms of looking for corporate fundamentals being sustainable. But from a very beginning standpoint, what we've actually seen is that throughout the summer, where the yen levels have actually been relatively flat during that stage, we're starting to see institutional investors coming back into that market. At the start of the year, we were actually seeing a similar pattern, but in Chinese equities. So at the start of the year, where we basically saw, actually early into the last year, where we started to see more stimulus rollout plans or basically trade-in schemes, more supportive policies, investors started to realize, well, maybe I can actually put a little bit more flows, not just in the U.S., but actually consider into EM, into Asia, or into China, where they have still this structural underweight story, but we're starting to see them close a little bit more of that gap, as we actually see from the data.
What's happening in Europe then? And I know you've got it now as an underweight rating, but what's driving that? Because there has been quite a lot of appetite, particularly on the defense tech story. Yeah. So at the very beginning of the year, we basically saw one of the biggest rotation where investors went very aggressive into closing the underweight story in European equities. It really lasted for, I think, 3 months at the very beginning, where we went from an underweight and into a slightly overweight story, and that's what we see. And there was an optimism story where we assumed that because of the geopolitical tensions between Europe and the U.S., Europe can spend more. And as you actually see more fiscal policies to come through, that could actually drive the overall growth story higher. But what we have actually seen post-Liberation Day from all of the flows that we see is that a lot of the initial flows have actually going back into buying into European banks. European financials have been the major recipients of that. But once we started to see more concerns over bad debt, or basically credit growth story slowing down once again, we started to see investors pulling that story out again. And we basically moved from an underweight story at the beginning of the year, right, to an overweight story in mid-year, and then now we're back to an underweight story. So it was much more of a choppy market than what we see from Europe, whereas it was more of a firmer story, let me put it this way, when we look into the China story or even the Japan story, where the flows were a lot more persistent.
I think so far we've covered equities. Outside of equities, what piques your interest? What am I sleeping on for next year?
Yeah, so one area that we are still quite optimistic on is receiving EM rates. So we still like the EM story. I think that the price action this year in EM equities was very, very positive. But whether or not it's sustainable, once again, relies on the earnings story. And the earnings story so far is a lot more driven just by the chip story. So it's chips earnings that's been really driving the entire broad market, but that needs to be sustainable. So I think it's a better opportunity in actually going into EM bonds. It's one way, especially local currency sovereign bonds is what we like the most, actually going into next year. It's because when we think about EM in the current cycle versus in previous cycles, they are a lot more, I would say, fiscally justified in a way where you see EM central banks being a lot more credible. They're not cutting rates aggressively just because the Fed started to cut rates. They're keeping their timeline. They're matching how their rate cuts are being justified based on their domestic inflation story.
Yeah.
So the fact that you're now seeing reserves getting higher, you're seeing credit ratings getting upgraded as well across many of these even frontier EM bond markets. So we see that spread compression to still be a key theme going into next year because of the fact that EM is looking more like DM now, as opposed to when you look at DM where you have I mean, it wasn't bad news, right? You saw the UK budget that lived up better than expected, but then you also had the Japanese story where the fiscal policy could again shoot JGB's yields much higher again. So right now you're actually seeing EM being a lot more conservative, and investors are rewarding that cautiousness, whereas DM is really on the other side of the spectrum.
Ben, thanks for joining us this morning. That was Ben Luk there, senior multi-asset strategist at State Street Markets. And just speaking about emerging markets, because I think one of the best performers this year has definitely been Korea, and very, very strong growth there, particularly on the export side. But we're just getting some lines that are dropping from the BOK because they're saying that export growth is likely to improve. On the strong chips outlook, we've been speaking extensively about this crunch in memory chip prices we're anticipating for 2026. They're also saying they remain cautious about risks that are related to home prices and FX as well, of course, the housing sector. And the housing market rally we've seen is one of the key concerns for the central bank that did elect to leave its benchmark rate unchanged this morning at 2.5%, but that was for a fourth straight meeting.
You know what? To Ben's point just now, might just be me. I think the BOK is done. Just looking at the phrasing, we'll get the thoughts.
Interesting. Some are anticipating further easing into next year.
Yeah, I think Citi was on Johanna Chua. If I'm mistaken, I'll correct myself later. But she mentioned a few weeks back that the BOK is likely on an extended pause for about 12 months when we get the next move out of them as well. Okay, just very quickly too, a lot of breaking news. Vanke, we're looking at that too. So a halt in the local currency bonds. That halt getting triggered following a steep drop in the price, and of course that resumes in a couple of minutes. More updates on that and all the things that we just talked about here with Bell here on the show. Right, shares are down. A shares on your screens. We're down about 9.7. Let's call it 10% over 2 days. Similar moves we're seeing in the A share market. Thank you so much. This is Bloomberg.
Bringing you some corporate news updates this morning, and the Chinese ride-hailing giant Didi has reported a 67% rise in quarterly profit. That's a positive sign ahead of a potential listing in Hong Kong. Net income totaled $212 million. That was driven by solid momentum in China that offset losses in international markets. Didi is often described as China's answer to Uber, but it was forced to delist from the New York Stock Exchange after Beijing cracked down on data sharing practices across the internet industry. Shein is under pressure from the EU to curb sales of childlike sex dolls and weapons on its third-party marketplace. That's after French authorities flagged the products earlier this month. Regulators have asked the e-commerce giant to explain how it prevents the circulation of illegal products. The European Commission says it suspects Shein's system may pose a systemic risk to consumers across the bloc. Automakers Stellantis and China's CATL have broken ground on a $4.7 billion battery plant in northern Spain, a project that underscores Europe's growing reliance on Chinese technology. The factory is expected to operate at 30% of its planned capacity by 2028 and employ nearly 4,000 people, producing about 50 gigawatt hours of batteries annually by 2030. leaving you with a shot of how Asian markets are looking this morning. We are about 20 minutes into the Hong Kong session, and we are seeing pretty flat, really, to start the week. Tech stocks just fractionally higher, but again, steady momentum as we get into trading action this morning. More ahead. In some world news this morning, and the FBI Director Kash Patel says 2 National Guardsmen shot in Washington, just blocks from the White House, are in critical condition. That comes after West Virginia Governor Patrick Morrisey retracted an earlier statement saying they died. President Trump said a suspect was in custody and had been wounded. The Pentagon chief, Pete Hegseth, added that the president has ordered additional troops deployed to the nation's capital following the attack.
We will never back down. We will secure our capital. We will secure our cities. In fact, this happened just steps away from the White House. It will not stand. And that's why President Trump has asked me, and I will ask the Secretary of the Army, to the National Guard, to add 500 additional troops, National Guardsmen, to Washington, D.C.
The Japanese Prime Minister Sanae Takaichi says she hadn't planned to go into details of a Taiwan contingency, with her remarks sparking a diplomatic dispute with China. Takaichi told Parliament she'd answered sincerely when asked about specific cases. The Prime Minister added that repeating the government's standard answer over and over would have made the parliamentary committee session meaningless. South Korea marked its first rocket launch led by a private company, a key milestone in the nation's bid to become a bigger global player in the global space race. The Nuri rocket lifted off Thursday from the country's south, with all satellites successfully separating. The launch was led by defense contractor Hanwha Aerospace and is part of a $1.8 billion program that will include 6 missions through 2026. We'll have more ahead. This is Bloomberg.
You're watching the China Show, just some live pictures here of the tragedy that Hong Kong woke up to this morning. Massive fire, biggest in decades. Hundreds of firefighters lining the streets, police cars, ambulances, fire trucks. Our correspondent Min Min Lo is on the ground. She'll join us in shortly to just help us understand the situation currently. As things stand, at least 44 people have been reported to have been killed. Hundreds are still missing. And we will get you the latest, of course, coming through out of the ground, where, in case you're joining us and just learning about this now, the initial reports that the fire started, what time is it now, 10? About 20 or 21 hours back. It's still ongoing. They've yet to put out fully, of course, the blaze, and that is an ongoing effort. And based on the guidance coming through from officials, that the efforts will continue well into this evening. So it is something we're not normally used to seeing, really, here in the city, Belle.
No, but certainly to just put it in the context of the size of this building complex as well, because you're talking about 2,000 flats. So yeah. Many people have been affected through this. And as you said, just trying to understand now, where do we go in terms of the investigations? Because government officials already said that the arrests have been made. Criminal proceedings will also go forward as well. And lots of questions around the exterior materials that were on this building that included possibly foam attached to windows, bamboo scaffolding that the government has been trying to phase out, but certainly possibly some very flammable materials that could have again assisted just the speed and the intensity of this inferno as well. But let's get more with our China correspondent Min Min Lo, who joins us at the scene. And Min Min, share some updates. We can see that over the past hour there's been further firefighting and rescue efforts underway. So how does it look now as opposed to when you arrived on the scene this morning?
Yeah, just beside me there are many buses. We are seeing fresh batches of firefighters with their gears, perhaps going to take over the other shift of firefighters. We did see some of them coming out looking just utterly exhausted. And it's just extremely saddening because we are well into the morning now, and I'm seeing more and more Hong Kong residents coming out here to watch the fire. I guess some of them are residents, and I think they're just heartbroken just to watch how, the firefighting is going on. And I was quite touched because I saw some residents and I spoke to them. They also came with instant noodles and blankets and things that they want to donate and give to the residents who live here. There's just a lot of community spirit and support coming out from the residents here, but just extremely heartbreaking. And if you can see behind me, there are still selected apartments where we can clearly see fire blazing through. So the fire is not completely put out, and we are seeing remnants of just blackened shell of buildings now. It's highly unlikely, I think, that the residents who lived here will be able to recover any belongings from the apartments. They look completely burnt. And yes, efforts are ongoing. We asked the firefighters that were coming out whether they have any information to tell us, but they said they couldn't share anything, and they would tell us if there is a press conference later. So the death toll still stands at the same number now. 44 is the current death toll. It could be revised later. There are still hundreds of people missing and unaccounted for, and the firefighters said yes, they are still trying to rescue people if there are any that are still trapped inside.
Min, it wasn't too long ago we had a similar incident with a skyscraper just here in Hong Kong, where the scaffolding also caught fire. And the only reason I bring that up is when early in the evening yesterday, and as pictures of what was going on in where you are were being passed around, it did seem like a similar situation, obviously in much more in terms of magnitude. Do we understand? Do we have a better understanding, maybe, what happened and what triggered this at this point?
Yeah, so right now authorities tell us they do not know what exactly caused the fire, but we knew the scaffolding caught fire first. Exactly what caused it is still unclear at this point, but this is a 40-plus-year-old estate, 2,000 units. They're all government subsidized buildings, so mind you, the people who stay here, they're not wealthy, and of course they are just, figuring out what is next for them now, especially those who do not have house insurance, where do they go to next. But as I said, over 40 years old, and it's under heavy renovation, so you can still see behind me the remnants of those scaffolding, the green mesh as well. And authorities said that the fire spread at a speed that was highly unusual, and they found substandard materials used. They found styrofoam, polystyrene materials covering the windows as well. And if the materials were up to compliance standards, these materials would have been fire resistant. And authorities said that, basically the materials, the construction company probably cut some corners and didn't use the right materials. That's why there is a criminal investigation going on, and they have arrested 3 people from the engineering company, accusing them of manslaughter and gross negligence.
Yeah, that's right. 2 directors and an engineering consultant from a construction company now taken into arrest. What exactly is next then, Min? What can we expect in terms of the government response and the continued government response on that part, and also just the efforts of firefighters over the course of today?
Yeah, I think the firefighting will continue on probably until end of today. The fire department did say they might take the whole day to really get everything under control. Possibly, they said they would inform us if there's going to be another press conference later. But of course, in the meantime, how are they going to settle the displaced residents? That is the big question, right? They already closed down, I think, about 12 schools in this region for the day. Some of the schools have been turned into temporary shelters. So there are residents over there. There's been food, McDonald's, McDonald's, coffee given out to them. And they have, allocated these community centers. They have also identified about over 1,000 empty apartments across Hong Kong, some of them quite far away from Tai Po, in Hong Kong Island or in the new territories that could possibly be spaces that these residents could temporarily stay in. But it's not going to be a very convenient situation for them. But yes, President Xi Jinping has urged an all-out rescue effort. The Hong Kong chief executive also paid his condolences and his tribute, especially to the firefighter as well. One of them died in the rescue efforts. He was just, I think, about 37 years old.
And Min Min, you've mentioned the materials in question here and maybe not actually meeting the standards set in place, but Hong Kong still is one of the few places in the world where bamboo is widely used in construction. What is going to be the scrutiny on that particular material, and is it likely to expedite government efforts as well to remove or to reduce the reliance on this building material?
That's right. I think there will be a lot of debate on that, right? And it's a bit of a controversial topic because some people are really proud that this is, something unique in Hong Kong. It's very characteristic of Hong Kong buildings and renovation, the bamboo scaffolding that is largely disappearing elsewhere. It is seen as lightweight and a good alternative. And if you use the right materials that are compliant, they're not supposed to be combustible. So I think definitely the residents are demanding answers from the government in the first place. Why wasn't there, better enforcement, better inspection, and perhaps the legislators might also be looking at, whether some of the rules needs to be updated as Hong Kong looks to possibly phase out the usage of these bamboo scaffolding for renovations in Hong Kong. But also, aside from the scaffolding, it's also just the nature of such a densely populated place, right? Because the buildings are so close together, even without the scaffolding, it's very easy for the fire to just spread from one block to another as well.
Yeah, absolutely. That was our China correspondent Min Min Lo there as we bring you the latest on the fire in the Tai Po district overnight, where at least 44 people have been confirmed dead, but possibly the death toll set to significantly climb, with hundreds still unaccounted for. So we'll bring you more details as they come to hand, marking the worst fire tragedy we've seen in the city in decades. This is Bloomberg.
Okay, yeah, this is a story that has suddenly emerged this week. Up until this morning, some of the local currency bonds tanked, and then you had some halts overnight. We had that disclosure coming out of the company. Shares are now reacting quite badly, as you can see on your screens, and we are getting some halts as well going into the thick of the session. This Wednesday, developers are coming up on your screens. Are we seeing this permeate across the broader sector? Whether blow up in spreads, equity markets, as you can see, are somewhat under pressure, not to the extent we're seeing in the idiosyncratic nature, of course, of the story, given the Vanke. Right. But yeah, let's get into this.
Well, yeah, I think it's a move really that's caught a lot of people by surprise, and I don't think you can forget either that China Vanke has been the nation's largest builder by sales. So this is a huge company that was sort of seen as one of the safer bets in the property sector, but now obviously having some pretty significant issues. But we can get more on the outlook and bring in our China credit reporter this morning. That's Kari Sue Lindberg with us. So what exactly is driving this, and why are we seeing this pressure right now, do you think?
Yeah, exactly. And I think this all really stems in part from the announcement late last night saying that they were going to postpone their 2 billion yuan bond. The payment was due December 15th. And I think we should also not be surprised at the same time, because this has been a long-term buildup, right? Because, what this delayed bond payment really signals is that they don't have enough money to pay their debt liabilities, and that means that they're facing a cash crunch that stems from kind of housing sales in the first place, right? And that has been building up the entire year. So if you were looking at the signs, it wouldn't have been hard to predict this. And so I think that what we're seeing now is kind of the fruits of that buildup, essentially.
And how do we need to be thinking about it's not like this is a news story. You know, we've been here, of course, and to your point, but in terms of how this spreads again into the broader sector, what specifically do you think we should be watching?
I think we absolutely have to be watching out for the December 10th bond meeting with Vanke, right? Because that is essentially going to determine if they can pay it and if they are going to be edging closer to default. Because if they do, then all bets are off, I think, essentially, right? Because what that means is that global investors, I think, across the board will be saying, hey, should we even be investing in China property anymore at all, even the ones that we're looking to reinvest? And I think that will have ripple effects for the Chinese economy more broadly, right? Because it's still about a quarter of the economy.
Do you see the ripple effects being a bit more constrained this time, just to David's point, because we've seen this playbook so many times before? Has already sort of the worst of the pressures been priced in at this point?
I think you're absolutely right. I think, it's unclear. I think the bottom would never be as kind of drastic and as vast as when kind of the slew of defaults happened, a couple of years ago. But I think in terms of, the overall picture of kind of what it reflects on China, I think it would still have a ripple effect because it would add to growing kind of distress sentiment on the country. And if you have that, how can you invest, right? Especially when actually that's the very thing the Chinese government is trying to spur, right? Foreign investment, and you're getting mixed signals. So really, I think the takeaway is that the Chinese government needs to do more, and it needs to do more fast.
Carrie, fantastic. Carrie Sue Lindbergh there, our China credit reporter, which goes into, I'm just going to mention something also overnight, might not seem related, but it is. So the notion is a K-shaped recovery, right?
Yes.
It's playing out across the property sector in China. Well, you had this ongoing rally in the tech space. The Fed Beige Book, I was going to mention that as well. Some of the numbers that have come through there do indicate that it's a similar dynamic taking place, right? The broadening out of the deterioration in the labor market, juxtaposed again to Mag 7 that just keeps going. And AI is obviously not so much a addition, of course, as far as jobs go. How does that inform us around what monetary policy should be, considering both those two things going into next year? Ray Farris is with us, chief economist, Eastspring Investments. Eastspring has also just released its very timely 2026 market outlook. Ray, fantastic to have you, sir. It's been a while. Thank you for joining us, and good morning to you. How would you describe the health of let's start with the U.S. economy and how we need to be thinking about rates from the Fed going into next year and how that sort of informs us how policy looks this part of the world, Ray, next year.
Great to be here, David. The way we think about it is the Fed's probably going to cut rates in December. The signaling out of some very senior, very important people, particularly the New York Fed president, suggests that. The Fed's very focused on the weakening in the labor market recently, and although we don't have non-farm payrolls data, we do have the ADP data, we do have continuing claims. All of that points toward a labor market that's really largely stagnated. The September bounce up in payrolls is probably not going to be sustained in October and November. And so the Fed's likely to cut. I think they'll probably couch it in terms of an insurance cut and try to signal to markets that from here they're going to try to pause for a while. But ultimately, they're likely to keep going in 2026. And that's one of the things that will keep equity markets and risky assets performing pretty well.
How concerned should we be about the signals we've seen of weakness in the retail sector in the US in particular?
A bit, but not massively. The fact is that historically, it's really investment that leads the economy into recessions. And the durable goods orders overnight were quite strong. It's clear that the AI infrastructure investment boom is going to continue. The companies have got the money, they've got the funding, and crucially, they have the will to continue to invest. The durable goods order suggests that there's a little bit of a broadening out in investment, not just electronics. I'm not going to say that that's going to be particularly powerful, but there seems to be a bit of broadening of investment growth, and that makes sense given that S&P 500 profits have grown pretty strongly. Profit growth is one of the best leading indicators of investment growth. Consumption is going to be bifurcated. It has been for a while. It's reflecting the big division in the United States between, in essence, the haves and the have-nots. Wealth effect gains in the upper income sector of the economy have been very strong, and that's really what's driving consumption. Below that, middle class, lower middle class is weak.
And Ray, how does this inform us now? People have been trying to figure out when to start reducing exposure to the big AI winners, right? So when you look at the region, the likes of Korea, Japan, which is now really an AI trade, you look at Advantest, obviously Mag 7, and rotate into the underperformers. Is there an economic case, you think, that we might see in the next 6 months that does justify that move out of tech into broader consumption, into broader cyclicals?
David, that economic case has been there for over a year. Last year, at this time, the key message from Eastspring Investments to our client base was, in terms of asset performance, U.S. exceptionalism is essentially over. And they needed to diversify portfolios globally, particularly into Asia. Since then, Asia has outperformed very substantially, not just in equities, but also in fixed income. Singapore is still one of the world's best performing bond markets. Will that continue into 2026? We think it will, in part because Asian earnings growth is quite simply superior to U.S. earnings growth, yet valuations are lower on a relative basis, and there's still policy stimulus and policy easing that's going to take place in the region.
I'm curious for your views on what we got from the Bank of Korea this morning, because we're having a bit of a debate here whether they're at the end of their cycle or whether we'll see further easing into next year. We did see them leaving their key rate unchanged at 2.5% for a fourth straight session. And we are seeing as well some lines coming out around actually the dissenters, but today's decision not being unanimous. Where do you think the BOK goes from here, particularly as it also signals that chip-led exports will remain strong despite US tariffs?
The likelihood is the BOK is done. And that's largely because the economy is okay. It's probably going to accelerate a little bit next year because of this very strong growth in exports related to AI. Crucially, the unemployment rate is low. Property prices are rising. That's politically very sensitive at this stage. Household debt levels continue to rise. Again, politically very sensitive. Further rate cuts would only add to that pressure. So given that the export outlook is pretty good, and the currency is at close to historic lows, really crisis lows in terms of a real effective exchange rate, there's just not a compelling argument for the BOK to ease a lot more.
Ray, thanks very much for joining us this morning. That's Ray Farris there, Chief Economist at Eastspring Investments, as we take you to that live press briefing this morning that's happening in Seoul with the BOK Governor, outlining the results of today's decision, but essentially saying that one of the 6 members called for a rate cut at the meeting. The others elected to keep it on hold. And as well, as we said, this outlook for next year, chip-led exports looking to stay strong as well. So we will bring you more details on that ahead. The board is saying it's open to both cut and hold options for now. But you just heard that from Ray, and we're getting that sort of continued voice coming across this morning that perhaps the BOK could be finished for the current cycle. More ahead. This is Bloomberg.
Right, straight back to Seoul, live briefing, Bank of Korea decision, a decision to hold. But here's the interesting one. The board was split evenly, 3-3, which, if memory serves me correctly, the governor is actually the tie-breaking vote there. And the decision to hold, they remain open to cutting rates, but the commentary that's come through so far is that they're probably done. They have said that they were open to cutting rates previously, next 3 months, but they have yet to do so. Joining us now is Minju Kang, Senior South Korea Japan economist at ING. Minju, good morning from Hong Kong. Do you think they're done cutting interest rates, the Bank of Korea?
Well, so far the information they revealed was very mixed. Actually, what I saw that there is only one dissent vote, and they revised up their GDP numbers, and also they tweaked their statement. I thought that, okay, this is done. However, yes, I saw that the split even 3-3 for the next 3 months is pro easing group still remain 3, which means that they still want to keep this easing bias. However, let's look at the macro conditions. Yes, we believe that this going forward, how this real estate market situation changes is going to be crucial for the next next times the BOK's decision, and also the current Korean won is going to see some appreciation after the Fed's rate cuts in December and so forth. So this is going to be still make the BOK decision alive for the next quarter. And if you ask me, Mike. My answer, then yeah, I think the probability of the easing is end is increase a lot after this today's meeting.
Minju, do stay with us. That's Minju Kang there, Senior South Korea and Japan economist at ING Bank, staying with us into the next break. And just to recap, you were saying there, Dave, about this is a board split 3-3 between hold and cut views, but that's, of course, over the next 3 months, they were saying. And from today's decision, it was one dissenter and the others electing to stay on hold. But we'll get more details on this decision. As we said, it's very much, it seems, a bit live for where we go in terms of whether the end of the easing cycle. But quite a few of the guests this morning are saying they're likely to stay or have ended or finished off their cycle for now. More ahead. This is Bloomberg.
Welcome back. Just a live briefing taking place in Seoul. That's the Bank of Korea governor outlining the rationale behind this decision to keep interest rates unchanged. That vote specifically was 1-6. One did call for a rate cut at the meeting, though if you need to look at the outlook, it's 3-3 as far as the board split is concerned, whether to hold or cut views over the short term. It's also worth pointing out this is the last one of the year, and then we have 2 more meetings in the first calendar quarter of 2026. Joining us now still is Minju Kang, Senior South Korea and Japan economist at ING. Minju, we'll talk about the Japan stimulus in a moment because we now have a number, I think 70+ billion. But let me just ask you more on Korea. With the latest forecast, I think inflation was also bumped higher for next year. It does seem the economy will fare okay going into next year. What is your view on chip exports and how that aids the broader Korea economy conversation?
Well, we believe that next year actually when I saw the BOK's GDP forecast, was the upward revision was quite moderate because our own forecast is growth for next year is a 2% versus BOK's 1.8%. We believe that, yes, the stronger than expected, a super chip cycle is going to boost Korea growth. And also, from the domestic side, not only just private spending supported by the fiscal stimulus, but also we believe that to see the very weak construction sector rebound, is expected from the next year. So that's why we believe that we're going to see more acceleration of growth in 2026. For the inflation side, actually, I agree that the recent weak Korean won is going to push up some inflation pressures. Looking at the imported prices and gasoline prices at the station. However, if this Korean won situation we expect it is going to get more stabilized. Then probably this pressure is going to be more just a near-term, short-term things. So having inflation around 2% is not going to be a major concern for the BOK for now.
How do they work to stabilise the currency, though? Because, I mean, you're seeing it slightly stronger today in light of this decision, but the governor has just been commenting that the yuan is weakening faster than its peers. It's showing an FX imbalance, and also just at least in the recent time, it's been driven a lot by investor outflows from international investors. How do they actually go about addressing that?
Well, actually, a very good point. Actually, look at Korean Kospi market this year. The performance, I think, return was more than 60-70%. However, the Korean won appreciation is a mere 1%. This is telling that this is not about just the FX market is very driven by the Korean resident investors. They're investing heavily more in the overseas. It's not only just individuals, but also institutional investors, such as National Pension Service. Recently, the government and body and the BOK and the MPS, they kind of form a four-party consultative body, and they're going to start a discussion about how to minimize the MPS's overseas investment in FX market. We believe that they're going to start probably going to start more FX swap program with the MPS, and also MPS can start their FX hedging strategy if this Korean won market stabilization is not come earlier than this. Yeah.
If inflation isn't the major concern, what is?
For the BOK. So actually, the concern should be more of financial instability. If the market expects that BOK is going to produce more liquidity to the market and then lower the interest rates, then the BOK's concern is that they might revamp about the housing market prices again. Actually, what we saw recently from the our survey, that consumers think that consumers' expectation on housing market prices came down a bit. However, it still stays quite a high level, which means that we see that the impact of the recent government measures of tightening mortgage rules and all the macroprudential rules. However, the impact takes longer than expected, and from the market, actually their expectation for housing market hasn't been very curtailed by the recent government. That's why the BOK's main concern remains on the financial instability that factor.
All right, Minju, please do stay with us. We're going to get to you just in Japan in a moment, but we do want to also cover our scoop first. And what Bloomberg's learned is that Japan's planning to issue almost $74 billion in new bonds, this to fund Prime Minister Sanae Takaichi's economic stimulus package. Let's get more with our Bloomberg economics and government reporter Yoshiaki Nohara joining us this morning. And Yoshi, talk to us about the size and scope of this and this debt load. I mean, we knew any new prime ministerial candidate coming in was going to be looking to increase fiscal spending, but does this stack up to what we heard on the campaign trail and also what was issued last year for Shigeru Ishiba's set of economic measures?
So, Annabelle, so two things to keep in mind. One is the, what is expected in terms of additional. The other thing is that, what would be the total JGB issuance for the current fiscal year? So both measures are important. And the first one is expected to be larger than last year, but the total one is going to be less than last year. So, there's a mixed signals from the government in terms of fiscal health, and it's up to the market to decide, how they interpret these two numbers.
Yoshiaki, just very quickly, we heard from one of the board members, Asahi Noguchi, earlier on. I think he was speaking to a business community at a summit, giving some guidance when it comes to adjusting monetary policy. What can you tell us about that?
David, one thing to keep in mind is that regardless of the degree of the language, how hawkish or dovish each board member is, the pattern, the consistent message from the Bank of Japan is that they are on track to keep raising interest rates gradually. And whether the pace is going to be faster or slower than what the people in the market are expecting, the direction is the same at this point. And I think it's premature just to make a total decision on just one board member says, because, we are going to have some more key, economic data coming out before the December decision.
Yoshiaki, thank you for the context there. Yoshiaki Nohara, our economics and government reporter on the latest out of Japan, still with us for some thoughts on Japan and this latest number, 70+ billion in likely new supply in JGB's Minju Kang, senior South Korea and Japan economist at ING. You're put this number into context for us in terms of the likely fiscal push and what parts of the economy, if any, will benefit, and how do you play this in the market is the part of that question.
So for Japan, we believe that it's going to. They're looking at their the new economic measures. Actually, they put more focus on stabilization of inflation. So it is going to first, it's by lowering the energy prices and gasoline prices, it is going to increase the real purchasing power of consumption. So I think, and also they're going to do some cash aid program for the childcare. So this is going to mainly, benefit to the private consumption, we believe. However, the thing is that, even if the headline inflation is likely going down below 2%, but we think that these measures will kind of keep the core inflation, excluding food and energy prices, going to keep above 2%. So in that sense, it is going to give more reason for the BOJ and, staying on their policy normalization path.
Do you think then that a December rate hike is still possible at all?
Yes, I think, we keep our long-been expectation for the BOJ's December rate hike. Recently, several board members expressed that, the underlying inflation is approaching 2%, and also, their real interest rates still remain in a negative territory. And if the economic conditions evolves in line with the BOJ's projection, then they are going to adjust their accommodative their monetary policy condition. And also, we believe that the recent easing of trade tensions between U.S. and Japan is going to give more confidence for the BOJ. And the very latest data also suggests that the Japan economy is showing more resiliency, despite there was some contraction in third quarter. However, we expect that it's going to the growth is going to rebound from this quarter, and also helping from this fiscal stimulus. We believe that they're going to be more GDP growth is going to accelerate more in coming quarters. So this is going to give more confidence for the BOJ.
Minju, have you gamed out? I just want to shift topics, staying on Japan here, on the impact to the economy, tourism specifically, because of what's happening with China over these comments on Taiwan. Not to get political, but have you gamed out scenarios how this might impact the economy in Japan?
Yeah, sure. Actually, in the past, when the two countries' tensions escalated, and the Chinese government kind of started to put some banning of tourism to Japan, it actually had some significant impact on the tourism side. But however, it's for but now what we are seeing is that also like more de-escalation of tensions. Then probably it is not going to have a very significant impact. However, if it goes to down the road, the more bad side, then probably it's more crucial for Japan, because not only for the tourist side, but also their dependency on rare earth material from China is quite high. and this is going to have some negative impact on the manufacturing and also industrial production. So this can be a risk factor for Japan's the growth outlook.
What about the moves then in the Japanese yen? Because of course, off the back of these concerns, we've also seen it weakening down to around a 10-month low. Do you see that sort of changing at all? Where do you see it heading into next year?
We believe that the trend heavily depend on the Fed and BOJ's rate decisions, we believe. And the thing is that even if the BOJ start resuming its rate hikes, we expect that the rate can be reached by 1% by the end of next year, which means that yes, they're going to be more narrowing the gap between the U.S. and Japan. So it is going to give more appreciation pressure to Japan, but the degree should be quite limited.
Minju, thanks so much for joining us this morning across this hour. That was Minju Kang there, Senior South Korea and Japan economist at ING Bank. And again, taking a look at how Asian markets are faring this morning, because we are just seeing some pretty subdued trading activity, actually. There's not so much conviction in the session so far today. We're seeing some gains across the board, but actually I'm just taking a look at trading volumes, and really across the Asia region this morning, they're pretty far off their 20-day moving averages. But we'll have more ahead. This is Bloomberg.
Welcome back. You're watching the China Show. Let's talk about this fairly eventful market-driven day that we had, of course, in the UK, where cable is 1 month highs on that. Yields last traded on your screens. You had the UK Chancellor of the Exchequer, Rachel Reeves, announcing $34 billion of tax increases in that budget that seeks, of course, to satisfy the demands of both bond markets and members of her own party.
Yeah, actually, some early indications success that she was successful with yields on gilts falling. That's while Labor Party MPs at least praised the budget's redistribution of the tax burden. Reeves spoke exclusively with us about the need to raise tax revenue to help support future economic growth.
Last year, I had to close the black hole in the public finances left by the Conservatives. And in the budget last year, I lived within the forecast set by the OBR. They have now changed their forecasts around productivity, and they are very clear that's nothing to do with the policy of this government, but that does mean they forecast lower tax revenue coming in. And I was always clear that I would never play fast and loose with the public finances, because it's ordinary working people and businesses that pay the price when that happens. So these are the fair and necessary choices in the circumstances that I faced. But what I'm now determined to do more than ever is to grow our economy so that we have the revenue both to keep taxes down and also to fund our public services. And that is what this government's plan for growth is all about, whether it's pensions reform, planning reform, the changes today to help make Britain the best place to start up, to scale up and to stay, with the changes to stamp duty for shares for companies newly listing in the UK. I'm determined that we get the growth that our economy has been sorely lacking for too long, and we do that through the reforms that we've set out.
Well, no confirmation of no new tax rises,
well,
Chancellor.
No Chancellor can write future budgets. I took the fair and necessary choices today, but my focus has been and always will be on growing our economy so that we can keep taxes down and have the money we need to invest in our public services.
That was the UK Chancellor of the Exchequer, Rachel Reeves, there speaking with Bloomberg. And in some corporate news as well that we're tracking this morning, the Chinese ride-hailing giant Didi has reported a 67% rise in quarterly profit. That's a positive sign ahead of a potential listing in Hong Kong. Net income totaled $212 million. That was driven by solid momentum in China that offset losses in international markets. Didi is often described as China's answer to Uber, but it was forced to delist from the New York Stock Exchange after Beijing cracked down on data sharing practices across the internet industry. Automaker Stellantis and China's CATL have broken ground on a $4.7 billion battery plant in northern Spain, a project that underscores Europe's growing reliance on Chinese technology. The factory is expected to operate at 30% rather of its planned capacity by 2028 and employ nearly 4,000 people, producing about 50 gigawatt hours of batteries annually by 2030.
Right, just very quickly, just to mark shares of PopMart are back 8%. I think we were up as much as 10%. This might be down to this partnership for an eyewear collection set with Lenskart. There we go. We're trading at 221 a pop on shares of PopMart.
Well, in some world news this morning, the FBI Director Kash Patel says 2 National Guardsmen shot in Washington, just blocks away from the White House, are in critical condition. That comes after West Virginia Governor Patrick Morrisey retracted an earlier statement saying they died. President Trump said a suspect was in custody and had been wounded. The Pentagon chief, Pete Hegseth, added that the president's ordered additional troops deployed to the nation's capital following the attack.
This heinous assault was an act of evil, an act of hatred, and an act of terror. It was a crime against our entire nation. It was a crime against humanity.
Japanese Prime Minister Sanae Takaichi says she hadn't planned to go into details of a Taiwan contingency, with her remarks sparking a diplomatic dispute with China. Takaichi told Parliament she'd answered sincerely when asked about specific cases. The Prime Minister added that repeating the government's standard answer over and over would have made the parliamentary committee session meaningless. South Korea has marked its first rocket launch led by a private company. That's a key milestone in the nation's bid to become a bigger player in the global space race. The Nuri rocket lifted off Thursday from the country's south, with all satellites successfully separating. The launch was led by defense contractor Hanwha Aerospace and is part of a $1.8 billion program that will include 6 missions through 2027.
Live pictures now out of Hong Kong's Tai Po district, one of the deadliest fires in the city's history. In case your viewers are joining us from across the world, it's almost 11 in the morning here in Hong Kong, which means this fire, which was first reported mid-afternoon, is now going on 20 hours. Our reporting does suggest that the blaze, as you can see on your screens, is beginning to look under control, but as you can see, still not completely extinguished at this point in time. In terms of the numbers that have come through so far, no updates from a few hours back. At least 44 killed, hundreds still missing here, Beth.
Yeah, that's right. We were speaking with our China correspondent, Min Min Lo, who's on the scene for us, and she was saying that death toll will likely climb. But again, it stands at 44 this morning. You just saw as well as Strapper talking about the arrests that have been made in this so far, because there's a lot of concerns around the materials that are covering this building. You can see here, and this is a familiar sight to many in Hong Kong, but that amount of bamboo scaffolding, also that plastic cladding that's on it. In addition, there are question marks over whether there was foam, some non-fire safe or approved materials also being used to coat the infrastructure, because we've already heard from the Secretary for Security, Chris Tang, saying that essentially that the fire burned with an intensity that was far faster and irregular, essentially, than it would have been had compliant materials being used. And as I said, those arrests already made 2 directors, an engineering consultant from a construction company in this as well.
President Xi Jinping has also chimed in and has asked local governments, other local governments to be more specific, to aid Hong Kong in the rescue mission. Bella and I were just talking about this earlier on. This is a massive apartment complex, 2,000 units, and based on the latest census out of the government, 2021, roughly more than one third rather, of the roughly 5,000 residents here are over the age of 65. Just to give you a sense of the scale of this. And of course, this fire then moved from one building to the other. And as we speak, the fire hundreds of firefighters are still, of course, trying to put out the blaze completely here.
Yeah, I think that is a really salient point, really, around the age of these residents, because it speaks to the challenges that many would have faced. Essentially, that death toll still comparatively low in comparison to just the sheer number that remain unaccounted for. So we will be continuing to monitor this situation very closely, but if you're coming into this to understand there has been a massive fire outbreak, the worst that we've seen in the city's history in decades, in a housing state in the northern part of the city. So more on that ahead. That's been the China Show. Inside is next, so do stay with us.